Alright family, happy Sunday guys. So, unless you live under a rock, you know that stocks are going crazy right now. Names like Amazon, like Tesla, like Apple, like Nvidia, like Google. Basically take your pick guys, and everything is making a pretty crazy move right now. Now you could make the argument that we're extended, and you're absolutely right. But I'm thinking there's a little bit more upside momentum, right? Regardless guys of how extended the Qs might look here, I think we got a little bit more upside momentum left. And here's the reason I'm thinking that, guys. If we look at last quarter, right, mind you, we're about to roll into the heart of earnings season here. This week we got Netflix. Following weeks we got names like Amazon, Apple, Google, Nvidia, all the big boys, right, Tesla, etc., etc. If we look at last quarter, guys, right, leading up to last quarter's earnings, they drove the crap out of these names, right? You look at Amazon here, ridiculous move into earnings. Earnings comes out, and we go sideways. We lose all of that momentum. Netflix is another one. Crazy ass move into earnings, right? We're talking, guys, from 300 to 440s, right? Crazy move into earnings, and then the stock goes nowhere. So you get all this crazy momentum into the announcements. The announcements take place, and the momentum is gone. Basically what's happening there, guys, is that the big money is pricing in the earnings ahead of time, right? They're pricing in what those earnings are going to be, what the forward guidance is going to be, etc., etc., well before the announcement, right? So they're driving this thing like crazy. They're running the calls up to the moon. Earnings comes out, and we get a big nothing because they already priced it in. So we look at a lot of different names right now, guys. Tesla, Netflix, Amazon, these names, they all got earnings coming up soon. Apple here, it's looking pretty damn similar to last quarter. So for the names that have earnings in the next couple of weeks, like Amazon, like Tesla, right? You guys can do your due diligence. But for these names, guys, that have a couple of weeks left to earnings, I wouldn't be surprised if the momentum continues right up into the announcement. I'm going to be looking to play a little bit of that, right? At the moment, guys, I got a put credit spread here on BABA. Now, granted, they don't have earnings till August, but nonetheless, things definitely look extended. I think we can see a little bit more upside until we've gotten through all their earnings, guys, particularly on these big FANG stocks. So, for the names that have earnings in the coming weeks, the Amazons, the Teslas, the Googles, the Apples, the Nvidias, etc., look for that momentum to continue, or at least personally, that's what I'm going to be doing. Thinking we can see more momentum, and then once earnings, guys, is over, maybe that momentum is gone, right? Maybe they're going to drive these things like crazy into earnings, and then we go into that nice, quiet, choppy summer. There's no telling we will be prepared for anything, but nonetheless, for these names that got earnings a couple of weeks out, if you kind of understand what could potentially be going on here, you can continue to ride those gravy trains. Now, for names that are going into earnings, like a Netflix here. Now again, I'm looking for a little bit more momentum into the announcement. So Netflix has earnings this coming Thursday. Y'all can see I do got a put credit spread here. Not the biggest position, but Friday morning, shorted the 510 puts, bought the 505s. We got about $1,300 of open profit. Max profit on this one is just about $4,000. If I can get out of here for about 50-60% of max profit, and then get out of there before the earnings announcement, I'll be more than happy with that, guys. But nonetheless, as we're approaching earnings, they're making crazy moves. And if y'all take a look here at the options chain, Netflix has earnings Thursday. These are the weekly options that are going to expire the day after earnings. Look how much premium you have here right now. Right? All the way out, guys, to 750, you got premiums on the call side. All the way out to 440 or so, you got premiums on the put side. So there's a whole bunch of premium here, right, on options that typically would have no premium at all, based upon how far out the money they are. For those of you guys unfamiliar, if you look up here at these three little M's, that is the market maker move. And you can see it says about 46 bucks. What that means is that the market makers are pricing this week's calls and this week's puts based upon their assumption that after the earnings announcement, Netflix should gap up at least 50 points or down at least 50 points. That's what these options are being priced based upon right now. So all these calls, they're being priced based upon an assumption we're going up about 45-50 bucks. Same thing here with the puts. So this, guys, is kind of, the underlying risk of holding an option naked into earnings, is that if we don't make a bigger than expected move, right, regardless if we go up, regardless if we go down, if we don't make a bigger than expected move, so if we don't gap down or gap up 50 plus points, the expected move didn't happen. The move that the puts and the calls are being priced based upon did not happen. All those options, guys, lose basically all of their premium right when the market opens if we do not make a bigger than expected move. So what that means is if we don't open below 500 or right near it, or above 600 or right near it, right, doesn't matter the direction we go, up, down, you got to make a bigger than expected move after earnings for those options to hold and potentially gain any value. So what we can do, guys, right, to actually take advantage of this is we can get on the same side as the market makers. They are typically not wrong. And again, we see the crazy move here. Very unlikely that there's going to be any big surprises. Of course, there could be. But the big money, guys, is basically pricing everything here in well advance. So what we can do, right, to make this a non-directional trade and just set up a trade here, guys, where we're going to profit as long as we make less than the expected move, or, or in other words, as long as we don't make a bigger than expected move, is an Iron Condor. We can take advantage of a little bit of the premium out here on the put side and out here on the call side, set up an Iron Condor, and then as long as after the earnings announcement, we don't make a bigger than expected move to the upside or the downside, we collect all the premium on both sides of the chain here as those options lose all their value. So we're going to have to see, guys, tomorrow morning, once these options kind of open up, what the real risk reward would look like. And obviously we'll have to check, into the earnings announcement before the close, what the risk reward would look like. But how you could structure this is on the put side, go a little bit further out the money than the expected move. So they're looking for 500, do a put credit spread at 480, 475. On the call side, you could sell the 620s, buy the 625s. Again, we won't really know what the true risk reward is going to look like until, we get up into the earnings announcement. It might not be that good, right? Like a 3-to-1. But nonetheless, guys, you would be basically doing a put credit spread, shorting puts down at 480. Right? You're shorting the puts down here, and then shorting the calls up there at 620. As long as we open up anywhere in that range, right? Anywhere above 480, anywhere below 620, the options that we've shorted in our credit spread, they're going to lose basically all of their value. And you're pretty much, guys, right at your max profit, pretty much at the open, or damn near close enough. So these trades worked awesome last quarter. We got profitable ones, guys, last quarter on Netflix, on Amazon, on Nvidia, and I believe on Microsoft as well. So we're definitely going to focus on these again here in the group, look to get a couple more under our belt. But as a general statement, guys, that's kind of what it looks like is taking place here. Now the big question is, once earnings is done for all the FANG stocks, is the party over? Doesn't mean we necessarily roll over, but do we begin to go into a slow summer? And if we do, then it's going to be Iron Condor City on the SPX. So that is to be determined. But those are my thoughts, guys. I wish you all the best of luck this week. If you haven't already, subscribe. If you haven't already, check us out at focustrades.com. Love y'all. Talk to y'all in the next video.